Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Hewitt podcast, available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 8th of January here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Trump escalates his threats against allied nations as the EU's new industry chief tells Bloomberg the bloc must be ready to defend itself.
UK government borrowing costs continue to rise as a global debt sale frenzy draws yield-hungry buyers.
Plus, Shein blasted. The chair of the UK's Business and Trade Committee says he has almost zero confidence in the fashion retailer's supply chain.
Let's start with a roundup of our top stories.
US President-elect Donald Trump has made several bold and improbable statements as he detailed plans to seek control of Greenland, Canada and the Panama Canal. During a press conference, Trump was asked if he would make clear he wasn't considering a military confrontation to achieve his aims.
I can't assure you, you're talking about Panama and Greenland. No, I can't assure you on either of those two. But I can say this, we need them for economic security. The Panama Canal was built for our military. I'm not going to commit to that now. It might be that you'll have to do something. Look, the Panama Canal is vital to our country.
World leaders have already responded to Trump's threats. Panama has vowed not to give up the canal. Denmark says it has no plans to cede control of Greenland, a self-governing territory. Meanwhile, outgoing Canadian Prime Minister Justin Trudeau posted on X that, quote, there isn't a snowball's chance in hell that Canada would become part of the United States.
Speaking at Mar-a-Lago, Trump also once again called for increased defence spending from NATO allies. The US president-elect says that members of the alliance should commit to spending more than double the current 2% target.
Well, I think NATO should have 5%, yeah. Well, you can't do it at 2%. I mean, at 2%, every country, if you're going to have a country in a regular military, you're at 4%. I think they should be, they're in dangerous territory. I think it should be, they can all afford it. But they should be at 5%, not 2%.
Trump's prior threats to abandon NATO and Russia's invasion of Ukraine have already driven many member countries to boost their defence spending. NATO Secretary-General Mark Rutte has signalled that the alliance is likely to raise its target for defence spending to at least 3% of GDP, but no member of the alliance currently spends 5% on defence. That includes the United States.
Trump's willingness to threaten US allies comes as the EU's new industry chief tells Bloomberg the bloc must be prepared to defend itself against protectionist trade measures from the US and others. Speaking ahead of Trump's press conference, European Commission Vice President Stéphane Séjourné warned the EU's era of complacency on protectionism has ended.
We will have a plan to protect the steel sector from global overcapacity while ensuring competitiveness. I'm prepared to explore both defensive and offensive actions with my colleagues at the Commission. This is a dialogue that we will have at the Commission. I still hope to convince the next U.S. administration that we have everything to lose from a collective trade war.
Stéphane Séjourné there speaking through a translator. Before Trump's re-election, Bloomberg revealed the EU had drawn up a list of American goods it could target with retaliatory tariffs to respond to any punitive trade measures from the incoming US administration.
Now to other news. The sister of Sam Altman has accused the OpenAI chief executive of sexually abusing her for almost a decade. In a lawsuit filed in federal court, Ann Altman alleges that her brother abused and manipulated her while they were growing up in Missouri in the late 1990s and early 2000s. Ann Altman has previously claimed on social media that Sam Altman abused her. In a statement on behalf of himself, his mother and his brothers, Sam Altman called the claims, quote, utterly untrue, adding that, quote, this situation causes immense pain to our entire family.
Governments and companies are flooding the debt market, raising $184 billion in the first few days of the year. Bonds all around the world are being issued at a record pace as issuers take advantage of calm markets before Trump's inauguration. The level of supply has led some to worry about countries like the UK, which saw its long-term borrowing costs hit the highest level since 1998 on Tuesday. Bloomberg opinion columnist Marcus Ashworth says he thinks Chancellor Rachel Reeves will get away with it.
We expect next year they'll probably issue a further 10% more gilts, to something like 330 billion. It's a lot of pressure on the investors and gilt market. They are getting paid for it, though. So, in some senses, if the Bank of England were to cut interest rates more than perhaps the market's currently pricing, only 2 cuts, the Bank of England's trying desperately to tell the market it could be 4. UBS is saying it could be as much as 6.
Ashworth warned that much of Europe's debt markets depended on the mood music from the United States. The UK and US governments are issuing nearly $30 billion worth of debt later today.
The UK's Business and Trade Committee says that it has almost zero confidence in Shein's supply chain, with allegations of human rights abuses in China's cotton-producing region of Xinjiang. Here is how the committee's chair, Liam Byrne, ended a public hearing with the fashion giant's EMEA lawyer after asking 10 times if Shein sources cotton from China.
For a company which is seeking to float on the London Stock Exchange, the committee has been pretty horrified by the lack of evidence that you have provided today. You've given us almost zero confidence in the integrity of your supply chains. You can't even tell us what your products are made from. You can't tell us much about the conditions which workers have to work in. And the reluctance to answer basic questions has frankly bordered on contempt of the committee.
Byrne, a Labour MP, was referring to press reports that Shein has filed papers to potentially list in London. Bloomberg has reported Shein's IPO would potentially be worth £50 billion, London's largest ever. Shein's lawyer, Yinan Zhu, said the online retailer is compliant with all relevant UK laws, but declined to answer questions about its working practices.
JP Morgan Chase is getting ready to tell its staff the era of work from home is over. Bloomberg has learned that America's largest bank is set to make working from the office 5 days a week mandatory in the coming weeks. Bloomberg's senior finance reporter, Sri Natarajan, says it likely comes from the top.
It's very fair to assume Jamie Dimon's on board. If there's anyone on board, it's Jamie Dimon. Everyone else has to fall in line. But all the sense we're getting, unless plans fall apart last minute, is sometime in the next few weeks, in a week or two, you could very well see JP Morgan come out and say they want everyone back in office 5 days a week.
Natarajan adds it's part of a broader cultural move in the US, with some of Trump's top team attacking federal officials for working from home. Wall Street firms have diverged on their work from home policies as executives remain split on how flexible employees' arrangements should be.
And those are a few of our top stories for you this morning. Looking at the markets, the MSCI Asia Pacific Index is down 0.6%. You also have a sell-off on the Hang Seng, down by almost 1 full percentage point. There has been a major move, of course, in bond markets. Treasury yields jumping yesterday, 10-year yields rising 5 basis points. We saw significant losses for UK gilt yields, 10-year gilt yields rising 7 basis points at one moment. In terms of stock futures then, for where we stand this morning, US stock futures are higher. S&P 500 E-mini futures up 0.3. US stock futures down 0.2%. The dollar flat at the moment, and the euro currently trading at 1.0357. Those are the markets.
In a moment, we'll bring you the latest on Donald Trump and Elon Musk's various interventions on the world stage, plus the demand for global debt as UK bond yields continue to rise. But another story that we've been reading this morning is from our opinion columnist Dave Lee, who covers tech in the US, and he's been writing about that video published by Mark Zuckerberg yesterday, in which he announced that they are dropping their fact-checking and verification team. This is a big shift from the world's biggest social media company, and the Dave Lee's view is essentially that fact-checking was always just a PR fig leaf from Meta, and that Zuckerberg, as a software engineer, never really believed in it, even at the time that he, was announcing it being set up, and in response to the huge criticism the platform faced in 2016.
Yeah, absolutely. And the piece is a really interesting one, and I think gives us good insight into what's happening in Menlo Park, what's happening across Silicon Valley. Dave Lee writing about how we're seeing Silicon Valley, above all, sort of perform this kind of backlash against the accountability that we've seen in the Biden era, and also around the kind of journalism and the reporting around accountability on these platforms. Because I think it's a really interesting piece. But even though Zuckerberg is perhaps giving the impression of supporting Trump and his allies, that maybe it's not quite so simple as that. Maybe Zuckerberg is not fundamentally changing actually his position, at least as far as Dave Lee sees it. Have a look at that piece on The Terminal.
Well, let's bring you more now in our top story and the comments made in Donald Trump's press conference yesterday, threats against Canada, Greenland and Panama. These statements coming as Bloomberg has been reporting on how Elon Musk has been exerting his influence over politics here in Europe. Joining us now to discuss, Bloomberg senior editor Alan Crawford. Alan, good morning. The phrase that was used for Donald Trump's first term was to take him seriously but not literally. How seriously should we take this idea espoused by Donald Trump yesterday of US territorial expansion?
We're used to elements of his undiplomatic language, but I mean, this is unprecedented. I mean, it's very hard to ignore these claims, but it puts world leaders in an extremely difficult position. I mean, how do they respond? It's frankly unprecedented and very complex ground for them to tread.
The idea of economic or military coercion against US allies is absolutely remarkable. Did we learn anything more concrete about trade tariffs, which is perhaps one tool that we know that President-elect Trump wants to use?
Well, it's certainly true that he has been consistent in warning of his intention to implement these tariffs. That, as we've seen, these are something in the order of 25% on the US's neighbours, Mexico and Canada, as much as 60% on China he's threatened. I mean, frankly, who really knows what the level may be, but there's no doubt that he has in the past enacted tariffs, and he will do so in short order. And it looks very much, I mean, it's no secret that he wants to use these to exert pressure on governments, and he's convinced that it will work.
You've been reporting this morning about Elon Musk ramping up his criticism and attacks of the UK and German governments, latching onto far-right causes, but also criticising their economic competence. How seriously do political leaders in Europe need to take this sort of criticism from Elon Musk?
They're walking on eggshells here because they frankly don't know. They don't know to what degree he has Trump's ear. Of course, we know that Elon Musk is very close, that he supported Trump's campaign, that he's frequently at Mar-a-Lago, that he has this proposed informal position outside the administration, advising on efficiency. But I mean, frankly, the comments that he's making that these are personal insults at the Chancellor of Germany, the UK Prime Minister, and it's really exceptionally delicate. And so you've seen leaders, they're saying that they try not to refer to Musk by name, and they say that this is beyond the line, or that it's even billionaires they're subject to freedom of speech, but they can also be wrong. So it's very, very delicate and difficult for world leaders.
Yeah, indeed. Calling Olaf Scholz a fool and the German president a tyrant, for example, calling for the Prime Minister here in the UK to be jailed. Those are very strong, accusations. What do you think might Musk's impact be on European politics, given that, of course, Germany is holding an election next month?
Yeah, I mean, it's very unclear. So far, there doesn't seem to be any impact whatsoever in the polls. This could backfire. Remember that Musk has Europe's only Tesla gigafactory, as they call it, producing cars, electric vehicles just outside Berlin. There has been talk of some kind of boycott. Who knows whether that will actually come to anything. But and in the case of the UK, there isn't an election due until 2029. So it really seems kind of unlikely that he can bring about any change, which begs the question why he's doing this.
Okay. Alan Crawford, our senior editor, thank you very much for joining us with details of that story, and you can read more details of it on Bloomberg.com and on the terminal.
Now, the UK's long-term borrowing costs have surged to their highest level in more than 25 years, raising the prospect that Chancellor Rachel Reeves may need to raise taxes again. This as the government is ramping up borrowing to invest in public services. Our managing editor for FX and Rates, Rachel Evans, joins us now for more on this. Rachel, good morning. Put the moves that we have seen in the last couple of days in context for us. Why have yields climbed to these levels now? And the big question, could they go higher?
Yeah, so I think there's two broad things that are really going on here. You have to look around the world, and there is a global sort of bond rout going on at the moment, particularly driven by what's going on in the US. There we obviously have kind of an incoming administration, Donald Trump, as we were just talking about, who's really sort of expected to kind of boost the outlook for more inflation. We're expecting more spending. We're expecting sort of tax cuts and deregulation. So there's a lot of fiscal concerns as we kind of start the year generally, sort of setting the tone for markets. But then we come to the UK, and these have also been issues here. So it's really kind of ringing true, I think, with investors that we need to take another look at whether debt is sustainable and whether it's sustainable at the yields that the government is currently paying.
Because, of course, the last time that we did see yields this high, at least for 30-year, the UK's debt pile was significantly smaller. What does borrowing at these levels mean for the public finances? And is Rachel Reeves going to have to raise taxes?
Well, it's clearly getting pretty expensive to borrow. I mean, we're definitely looking at kind of a higher burden in order to kind of service the debt when we are at yields like these. So they need to find more money, basically. So they need to have either more coming in or less going out. And that kind of brings them back to sort of the debate that they had prior to the budget. You either need to be looking at cuts to reduce your outgoings, or you need to be looking at taking in more through taxes or getting more through borrowing. They've obviously sort of set some very strict guidelines for themselves via their manifesto on what they want to increase in terms of tax and how they want to be thinking about sort of the different sorts of public services that they can offer. But there is very limited room as well on the borrowing side. We're already borrowing £297 billion this fiscal year. And the budget announcement back in October prompted sort of a little mini tantrum in the gilt market around that figure, even though it had been, to be honest, really widely flagged. So we are sort of starting to push up against the limits of what the bond market will accept, which does then beg the question of where else do you find the money?
Yeah, indeed. At what level, though, does this actually become a kind of crisis, I suppose, for government, for the Chancellor?
Well, we're already back when we look at the charts to the levels we saw under Liz Truss. That was obviously a bona fide gilt crisis. But I think we need to look at kind of the severity of the move. We've been much more gradual, and this has been much more a kind of story of yields around the world rising rather than the UK being out of sync with the rest of the world. So I think that's going to be the key to watch. To what degree is the UK kind of moving out of line from its other peers? We had an auction yesterday. It went reasonably well. It was still oversubscribed, albeit less than some other auctions in the past, and it priced pretty much in line with where yields have been. We've got another one today, another 4.25 billion of debt being sold. It's the job of the government to find a level at which those auctions go through. So we won't necessarily see those issues start to show up immediately, but it's definitely going to be something that, if yields continue creeping higher, and we're not yet back to kind of the cycle peaks that we saw in the US kind of a year or so ago, we really could see kind of the pressure being ramped up in the UK.
Is there a level at which a lack of demand becomes an issue in these upcoming sales? You referenced the auction taking place later today.
Yes, but I think, this is the sort of thing where, the debt management office, their job is really to come into the market and see what level will work. You can get a full-on buyer's strike where we don't see any bids coming in or enough bids coming in, and that becomes a real issue, but those are very, very rare. And I think a useful sort of comparison to look at is if, we look across sort of the English Channel to France. France has had no real problems with its auctions, despite all of the political issues over the last 6 months. So it takes a lot for auctions to become problematic, because there's still a lot of different reasons why investors will want to kind of buy gilt. They fit into their plans that they're running. They need to replace securities that are maturing. So for those auctions to really grow into a halt, we need to see something a bit more substantive than we've seen thus far.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.